Good evening, everyone. This is Brian Gardner. I'm broadcasting live from Georgia. Just kidding. Anyway, so I want to do a quick video for you guys, just explaining OTM trades, or out of the money trades, and kind of how I implement those in my daily trading strategies. First of all, it's got the best reward versus risk, high RTI, and that's your return on investment. You're getting in for a low price, you're selling at a profit if you get the right place. Let me walk you through exactly what I'll do. So at the beginning of the day, I'll go ahead and plot my deviations, and you can see here these are some of the deviations. So we have a plus 0.5, a 1, minus 0.5, and a minus 1. These deviations, Mark is typically give them to you each day. He's been doing two markets, the Wall Street Journal. The Wall Street Journal. He's been doing the Wall Street 30, and I believe he's been doing the NASDAQ or US 100, one of the two. But anyway, I want to give you kind of my take on the whole thing. So with these deviation levels, what I'm looking for is when the market hits those areas. Okay, I'll start off with the value area. What you see here with the yellow lines and everything, this is a volume profile, and this is built into Thinkorswim. You can use it like I use it. I basically use it to draw my value areas. So this being yesterday's value area, basically what you would do is you draw your box from here to here, and that would typically give you your volume area for the next day. Now when volume accumulates to about 70%, which is going to be around noon each day, that is going to be the point in which you want to switch over to the current day's volume area, which is going to be the built-in TOS volume area, or the volume profile. And I use this helps out a lot because this will draw as the day goes on. Typically around noon is when it's going to be most accurate. That's when all the levels are pretty much going to be ironed out for you. It's going to show the levels at which the highs of the day and the low of the day are going to kind of accumulate. Here you can see this was 1 in the morning, 6, 7, 10. It's already got a pretty good volume built up at that point. You see here where price went outside. Typically when it goes outside volume area, you're going to see a nice bounce, or you're going to see it drop once it gets out. This is what I look for. I look for it to hit the top, keep going. When it starts to consolidate, that's when I usually hop in. And I don't sell here. Okay, what I'll do is I sell here. I sell down below. Now you might see it might take a little while for it to get there, but it eventually does. When price gets up here, touches the plus 0.5 deviation at 1 o'clock, that tells, and also let me zoom in really quickly just so you can see exactly. Alright, so price is consolidating, consolidation, then we have a spike, then it goes up and it touches, just briefly touches the plus 0.5 deviation. Once it touches that, our next candle, I don't know if you guys can see this, touches plus 0.5. Next one, doji, flattened out. That tells me that candle was a sure sign that price was going to go down. It touched it. We got a doji right after. This is the point at which you want to set your OTM up, your out of the money trade. At this point, I would have sold whatever strike was available at a cheap price. Chances are it would have been the 2017. I didn't trade today. I had a really busy day. But as you can see, price came back into volume area, peaked above it slightly, kind of consolidated above that point. The bulls tried to push it down, or the bears tried to push it down. The bulls stepped back in, pulled it back up. Another doji. As soon as that doji hit, boom, price fell. So a lot of times in my trading, what I'm looking for is momentum. And what you see here is you have momentum. It's going up, and then you get this candle. It's like a upside down hammer or whatever you want to call it. That tells me that the bulls are done making the run, and the bears, time for them to take over. Then you get a nice little sell-off here. This is the 1 minute chart, by the way. So anytime you see a big candle on the 1 minute chart, that was a lot of movement in a short period of time. I'm typically going to use the 1 minute chart in my trading. It's a whole lot easier for me. This is another point at which I saw price go up outside of value area. This candle popped up. That would be the point when I would sell. Not sell here, because price up here would be at the money. You'd be looking at $50 or more to sell. What I would look for is something down here, something lower, something much lower, maybe at the bottom of value area. Sell this, you're going to get it for maybe $20 out of pocket. When it comes down and hits that area, it's going to be at the money. You're going to be looking at a $30 profit in a relatively short period of time. Let's see what else. This volume profile is very it's a very powerful tool. I'm more of a volume trader anyway, because I look at what people are interested in the market, what are investors really going for. I also have a what this is going to do is this is going to show you what the current trades are, what people are currently buying and selling. It's going to give you a price here in the middle. I like to use this just to kind of find my point of control, or POC, for the day. Which you can see it's it's still active now. There's trades going on. They're typically, our biggest volume areas are looking at 665. It's going to be in this area up in here. But the biggest trade came in at 598. It's going to be lower. Right here, 596, 597. These are going to be your areas you want to look for. These are your points of control. This is where the most trades happened in that day, which means most people have their money invested in this number, which means it's going to be a strong support level or a strong resistance level, depending on if it was bulls or bears who controlled it at that time. Now, you can see in this area there were a lot of bulls that came in. What you're looking for is who had the most control in this area at the POC. Who had the most control? And it looks to me like the bulls. The bears tried to push it in. The bulls picked it back up above. So you have a nice level of support through here. You can see it going on throughout the day. And then here's the end of the day. This is the end of the trading day. But anyway, what I'm looking for is the levels. See, it pops below the value area. As soon as it pops below, pops back up, goes back up. Value area is very, very strong. What I'm doing is I'm taking these low spots, these low areas, and then I'm buying at the top. So probably here, you're looking at, you know, not much of a difference. I mean, you're looking at about enough for you to profit a little bit on it. And of course, this was still early in the day. This was all of today's trades. In order to have successful out-of-money trades, you have to have volatility. Volatility where the market is just up and down, up and down. I mean, you can clean house. You're also going to be looking at volume spikes. And that's going to be here. This is going to be your volume spikes. You're going to look at your big spikes. If you're sitting here, you're watching the market, it's getting up, it's hitting that 0.5 deviation, it's not wanting to go any further. You're getting a doji here. You got a doji after it hit. That's telling you, hey, that market's about to drop. What happens? Come in, you get your volume spike. Volume spike. That's pushing the market down. Pushing it down. Another tool I like to use is the Hikinashi. I like this because this is going to show more trend in the market. It's going to give you a little bit more trend as opposed to solid candles. So what you're looking for with Hikinashi is indecision in the market. This candle was your sell candle. This is telling you, hey, market's going down. I probably at this one would have sold here. I would have let market drop all the way down at that sell point. That sell point. I would have sold here at the bottom of value area. Like I said, it may have taken a little while to get there. You're looking at about 2.5 hours. But it would have got there. You would have made some money. Another thing with OTMs, you have to look at time decay. Time decay will kill an OTM. If you don't have that volatility in the market, don't even worry about putting in OTMs. It's not worth it. But basically, I just want to give a kind of a small video on what I do in this instance. Give some suggestions what you guys would like to see. I like to do some more videos. I'm not very good at them. I'm not as good as Mark. And no, I apologize for not having any dogs barking in the background. I know that's proper etiquette lately. But I do have screaming kids, which I could probably pass off as dogs at some point. But anyway, we got a nice jump here in the market. Market's going up, 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 and of course prices are going to be very high at market open. just because there's so much room for it to go either way. OTMs, I wouldn't recommend them at the end of the day. They're going to be a lot cheaper. They're going to be very tempting to do. However, the cheaper they are, the less percentage they have to complete. Also, another tip with OTMs is you always want to take profit if you can. If you can't, get out of the trade. Take profit. Don't let it expire. You're just going to blow money. Always take profit when it comes to OTMs. Typically what I'll do is I have a 50%. If I buy it for $10, I'm pulling it at 20. And that's just my thing. That's, well, not a 50, it's basically at 200. So I'm taking profit once it doubles its value. If it doubles its value, I'm taking profit. If I see a point where the market is showing indecision candles, then I will probably pull my trade at that point too. But like that one trade here, selling down here, I would have let this ride because I know there's still room for it to go further south. Even though it popped back up, kind of the bull stepped in and kind of picked it up a little bit, I know that once it gets above this, they're pulling it back down. Gets above it, they're pulling it back down. Gets above it, they're pulling it back down. Pulling it back down. There's consolidation. The bears are not letting the bulls take control of this trade. Gets up, they pull it back down. It gets up, it spikes again here. You had your high. They slammed it back down and moved all the way back down to value area low. And this was, I would have been using this value area because it's after 12. I switch over to this volume profile at noon. Between 12 and 12:30, that's when about 70% of your trading day or your volume is already accrued. But anyway, if you have any questions, let us know. We'll get it done for you. And I hope you found this video interesting. I'll explain it more into detail. I probably need to take notes, that way a little bit more prepared. I just kind of went off the cuff here just to try out new software. But anyway, if you have any questions, let me know. Thanks.